What's the risk that the Fed can jawbone the 10-year yield higher from here by dropping the considerable time language before raising rates? Or is this move we're seeing now already reflecting that?
Well, to be clear, the Fed isn't trying to jawbone rates higher. The Fed is scared of their own shadow whenever rates go up. Because why? Because you get data points like this NBA refi index. The minute that the rates go up, people, Janet Yellen cares about two things. She cares about housing, and she cares about employment. And when rates go up, she gets really concerned. She thinks that that's really, really bad. So again, they're trying to move to quote unquote flexibility because she wants to be able to change her mind. Because Fisher has basically said to her, McFly S, or whatever you want to call somebody at the Fed at this point, invoking my, the old Marty McFly thing. It's like Fisher's sitting there saying, okay, so our forecasts are wrong like almost all of the time. We're wed to this calendar. We don't want to do either of those things. So why don't we start to change the language and leak it to Leisman and then these guys out there let the bond market react. But what they aren't trying to do here is get rates up. What they're trying to do is just change people's expectations that Jan Hatzius could literally nail on the date when the Fed has to raise interest rates. They don't want to be on a calendar. They don't want to be accountable to that. And then you have Plosser and some of the hawks at the Fed saying if you were data dependent, we would have raised rates. That is true. But now if you're data dependent, you're going to be getting more dovish because, again, the rate of change in economic data is deteriorating, not accelerating like it was last year.
Yep. And then lastly, you mentioned you like the high-yielding, slow-growth side of the domestic equity market. We've gotten a decent pullback on rates rising here. So do you see some good levels to buy them ahead of next week's Fed meeting?
Yeah, the utilities. I mean, they pull back. Utilities pull back. VNQ, which is REITs, they pull back. Any long-term bond pull back. I mean, there's a lot to do out there. Again, if you're not trying to buy Alibaba, I mean, there's a lot to do. If you're a macro person, there's a lot to do. There has been a lot to do throughout the year. What I highly suggest is that you don't buy a bubble and you don't buy some small, illiquid, super secret U.S. navel-gazing stock idea that you can't get out of. Now, if you're an individual, you can get out of anything. You can watch some of these day traders on Twitter. At 2011 in the S&P, they're uber bullish. At 1988 into the close yesterday, they said, I'm all in cash. I mean, unfortunately, the institutional community can't do that. When this baby starts to blow up, they will not be able to get out of these small and mid-cap stocks. So we don't want you to touch those with a 35,000-foot pole. Go buy yourself some international equity exposure that you can get in and out of, and certainly buy bond exposure that you can get in and out of. And that market obviously trades like free market water.
Yep. And then lastly, you've turned noticeably bearish in the last couple of weeks. What's the feedback you've gotten from your institutional subscribers on that?
Shock and awe. No, it's like, actually, a lot of institutional customers have been sending me some of the most redonkulous bull cases I've seen at this stage. So it's not a refutation of the bubble. Actually, one consistent refutation of the bubble call is that there's a bigger bubble in bonds. No. The bigger bubble in bonds was last year's call that we made. There's not a bigger bubble in bonds until bonds get back to their all-time highs. So in other words, until the 10-year bond, at 1.7% in the 10-year bond yield, I'd be happy to call that a bubble. There is a bubble in debt, but if you had to look at both horses head-to-head as bubbles, the S&P 500 is much more a bubble today than the 10-year bond yield is. So I get that feedback. In general, I get a lot of, hey, great note. When is God going to call you and tell you when this thing's going to crash? And I say, I don't know. I mean, it's still a bubble, though.
Indeed. We'll wrap it up there, folks. Thanks for joining us this morning. Catch you back here tomorrow, same time. Have a great day out there.